The VIX or Volatility Index is starting to signal that we might have bottomed out a little bit. I'm putting together both the put call ratio and the VIX. I want to show you that I think we'll probably see a small spike. If nothing else, nothing. And because of that, I'm stepping in and selling puts on UVXY stock, which is the ETF against the VIX. Let's jump into some charts and I'll show you what my thinking is and why I think we'll probably see some movement higher in put call ratio and put prices. And because of that, my UVXY stocks that puts that I've sold expiring next week are going to go worthless, and I'll collect that money. Let's jump in. If you're just joining me for the first time, thanks so much. Make sure to hit the like and follow button. Really appreciate it. This channel is something that I'm kind of breaking out of my original channel, which is Cannabis Stocks Analysis. And I specifically look at the stock market, the broader stock market, breaking down all the little facets to give you individuals an idea as to what the economy is doing and how it applies to stock market analysis. So make sure to hit that like and follow button. The channel is growing quite rapidly. Thanks so much for all the great comments and everything going on. I really appreciate that. And let's take a look at, this is the put call ratio. Now the put call ratio basically says for every call, how many puts are being bought simultaneously. And as you can see, there was a pretty nice little drop lower here on, I want to say it was about the 16th or 17th. I actually bought SPY stock, which is the ETF against the SPX, the S&P 500, calls or puts on that day. They were just so super cheap. Now, on the one hand, we've got Thanksgiving next week, so no one's really expecting any kind of big moves. But my options expire on Wednesday, and they're pretty much just sitting right at the price I paid. We've seen some kind of movement lower in the SPX index, S&P 500 SPY stock. In the meantime, individuals are starting to buy more puts. The ratio is starting to get back to pretty close to what is normal. And so what that means is there's a number of puts that are being bought either as protection from people who believe that the stock market run is likely done with and SPX will fall, or this is indicative of people who just want to kind of protect themselves. So it's either hedging or speculating. So we're getting back pretty darn close to normal. Now it's a matter of what did they pay? So on the one hand, there's a total volume, and as you can see, the total volume was pretty low. Then the next question is, what did they pay? As they continue to buy more and more, you start to see here in the VIX itself, the sheer volume increases the VIX because more are being purchased, more puts are being purchased, and therefore the value of that goes higher in total. Now the market hasn't moved too much, so this is more of an adjustment of the put call ratio getting normalized. So I bought on that dip the SPY puts. Where do we go from here? Now, and UVXY stock is one I like to trade a lot. UVXY, of course, is the ETF versus the VIX. Generally speaking, 1-for-1 ratio, except for a couple things. There's a forward look. UVXY trades the first and second month versus the VIX itself, which is more real time itself instead of looking forward. Second, there is the concept of those guys got to make their money. So there's a continual reduction of the value of the fund because they're getting paid. All right. So you can't just buy it and just hope that it just shoots up one day simply because. It will continuously move lower because of inflation or interest rates and because of someone wanting a payday. But I feel like we pretty much bottomed out where we are right now. Now what we're likely to see is prices move higher, the VIX moving higher because S&P 500 moves lower. The S&P 500 itself, flatlined, starting to kind of move a little bit lower. I'm long some puts on 446 puts on SPY, expiring Wednesday just before Bird Day. So we'll see how that works out. But I feel like just because I bought at such a bargain with UVXY so low that I'm going to make that money off the S&P 500 should we see any kind of moves lower. In the meantime, we're seeing bond yields just starting to kind of tick back upward, and that could take some people to hit the sell button in the S&P 500. We'll see how that plays out. In the meantime, and here's a look at the S&P 500 itself. A little too much, a little too high, a little too fast. There are very little reasons to be rushing in and buying stocks right now, thinking that that's it. The Federal Reserve from this point forward has hit its maximum and stocks will rally. Stocks are not going to rally. We're entering a period where the economy is likely to contract more than it will expand because the Federal Reserve has raised interest rates. When the Federal Reserve decreases interest rates, it's because they went too far too fast again. So for me, for right now, I'm looking at the bond yields, and I feel like they're going to be flatline. I don't see a rally. I don't see a fall. That the yields are probably going to, like the 10-year yield, probably maintain between 4.5 and 5% for 3, 4, 6, 9 months. I'm not looking for a big move. So when we see moves higher in the or lower in the yield, I'll probably step in and make some option trades that way. Because interest rates will remain higher for longer, but they need to contract the money supply, and that's the way they do that. They'll cause a little more damage than they'd like to do, getting the economy back to normal. In the meantime, UVXY stock, I'm going to go ahead and hit the button on some puts with expiration probably next Friday, just after Turkey Day, when everybody's going to be asleep. They'll probably expire worthless. I'll take a couple pennies. And I'll keep trading that trade because it's kind of easy. With the expectation, S&P 500 probably doesn't have much higher to go. And it only takes a moment for people to hit the sell button on the S&P 500 and go back downward. The move we saw upward was sort of a relief rally from the big sell-off. But what is normal? The S&P 500 would be normally lower than what it is right now. And I'm pulling all these pieces together to make this move. If you like trading the VIX, UVXY stock, the ETF against the VIX, make sure to hit that like and follow button. I keep putting information out there on the broader stock market analysis. See you in the next video.